Chegg was worth $14 billion in February 2021. This week it's trading for $1 and change, market cap under $115 million. 99% of market value gone in 5 years. The headline calls it the first company AI killed. The more interesting question is whether killed by AI is even the right description, and how that description differs from 3 other things that also get called it, because they are not the same thing. Chegg, American edtech, homework help, textbook rentals, online classes, mostly used by college students for the 20 years before ChatGPT existed. February 2021, pandemic peak. Stock at $115, market cap $14.7 billion. 5 years later, stock at $1.02, market cap just over $100 million. 99% of market value gone. 2 rounds of layoffs in 2025, 22% of staff in May, 45% more in October. The company publicly cited the new realities of AI. The stock has nearly been kicked off the New York Stock Exchange for trading under $1. What Chegg sold for 20 years, a human answering your homework question within 4 hours, for about $15 a month. What ChatGPT has given away for free since November 2022, the same thing, instantly, with no human on the other side. The value Chegg was selling is the exact value a chatbot can now produce at zero marginal cost. This isn't AI made the workflow more efficient, this is AI replaced the product. The product and the tool are the same thing. One of them costs money, one of them doesn't. That's the moment when the market stops paying for the paid one. There are at least 4 different things being called AI caused this layoff. They are not the same thing. 1. AI washing, cuts that would have happened anyway, relabeled. 2. AI native restructuring, a company reshaping around AI as the new stack. 3. AI-displaced workflow, specific job categories replaced by specific tools. 4. AI killed company, the product made obsolete because the product was the thing AI now does for free. Chegg is a 4. Most headlines are 1s and 2s. The distinction matters because the futures are different. Meanwhile, across the aisle, Bitcoin miners are becoming AI data centers. Hut 8 and TeraWulf both have Bitcoin mining infrastructure, power contracts, cooling, rack space that turns out to be usable for GPU-heavy AI workloads. Bitcoin mining stopped being profitable, AI compute is paying. Different workload, same physical plant. Block Inc., Jack Dorsey's fintech, cut 40% of its staff in February. Dorsey's quote, "Block will be significantly more valuable as a smaller, faster AI-native company. Block is Type 2, AI-native restructuring, not the same move as Cheggs. So which industries are on the shelf? Not guessing, the question is which ones sell a product whose core value is the thing an LLM does for free. Homework help is a 4. Chegg already happened. Basic copywriting sits there. Tier 1 scripted customer support sits there. Stack Overflow is already being hollowed out. Traffic halved since ChatGPT. Non-literary document translation. Generic summarization. Teaching to test content. The flashcard and walkthrough market. These aren't predictions, these are categories where the product is the thing the chatbot gives away. The company operating in one of these categories has 2 years, maybe 3, to pivot the product or go the way Chegg did. The stock didn't drop because of bad management. The stock dropped because the product's economic moat evaporated. The distinction that matters, Chegg's product, human answered homework, is the exact thing AI now does for free. The product stops existing as a product. Block's product, payments, banking, merchant tools, keeps existing. Block is just operating it with fewer people. Both reduced headcount, only one of them had the underlying service replaced. The forward question for every other company in the market, is your product what AI does for free, or is your product a thing AI can now operate with fewer humans? Those are different futures, very different futures. When the headline says AI killed the company, ask, did the product stop existing, or did the people operating it? The industries to watch next are the ones whose product is the thing AI does for free, not the ones whose product just takes fewer humans to ship. Chegg is the first to go in this specific way. It will not be the last. The question is which product categories are on the same shelf? Which companies sell something an LLM now does for free? Watch those. The rest, the ones that just need fewer people to ship the same thing, are restructuring, not dying. Different problem, different window, different story, same press release.